morning, ladies and gentlemen. This is Butch Shorak, Options University. Monday, September 17th, 2012. Access to this webinar is for educational and for informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Well, looking at the week that was, it was quite a week as far as economic announcements were concerned. Very little on Monday. Tuesday, very little happened, and then it begins. FOMC meeting took place on Wednesday. Huge surprise on announcement on Thursday. As we see that, we ended up with, from the FOMC, QE3, $40 billion a month in mortgage securities that the Fed's going to be buying back. PPI disappointed on Thursday. Who cared? Jobless claims disappointed on Thursday. Nobody cared. Went into Friday. CPI was better than expected. Retail sales was better than expected. Consumer sentiment was better than expected. And we'll see what the end result was on the market on those days as we keep those things in mind. Next, we'll take a look at the next week and see what we have coming. Again, very little on Monday. On Tuesday, very little happening on Tuesday. And then on Wednesday, we got existing home sales. Coming into Thursday, jobless claims, which always is of interest to us. PMI comes up on 9 o'clock on Thursday morning. And the Philly Fed, which used to move the market a great deal, sitting there on Thursday at 10 a.m. Economic leading indicators to tell us how the month of August did come out at 10 o'clock on Thursday. And then Friday, options expiration day, quadruple witching day, a day of much volatility many times in the market. We'll see exactly how this week comes out. This can be a very volatile week as far as trading in the market as we go into options expiration week. Looking at the SPX, we look at the 5 days last week and we see, can you say a breakout? Can you say crash to the top side? Can you say Bernanke, do not fight the Fed? As we see, we consolidated the first few days of the week, and then came the announcement, and boom, we moved. However, we had a bit of a stall on Friday, as there was not as much follow-through as one might expect, and one can say, well, that could be the beginning of a rollover. Are we overextended? You bet we are. Should you short the market? I have no idea. And the reason I have no idea is because there is that general rule, don't fight the Fed. So what are we expecting as we go into next week? In fact, let's take another look at this in a little larger scale. We see that we had a big move a week ago Thursday on some economic announcements out of Europe. It then consolidated as we went through the week until we got the Fed announcement. In anticipation of the Fed announcement, it was going nowhere. Mr. Bernanke did not disappoint. He gave the bulls exactly what they wanted. QE3, more easy money in the form of quantitative easing part 3, and the economic data added more gifts for the bulls as the market headed up as we go into the week. Now, we did have follow-through. We got a higher high, higher low. We are in an upcycle and an uptrending market, but we are a bit extended. We are a bit far away from that 30-day moving average, which is sitting right down there. And it is time to have a bit of a pullback. In fact, that's what healthy markets do. It's hard to say exactly what the effect will be on the institutional buyers as we see us moving higher and higher without much of a pullback. We've been going up since last June. Retail sales for August were moderately higher than expected, and all the economic news for this past week was not all that bad. Only the unemployment numbers on Thursday morning were a little bit off, and it really didn't affect the market as we look at Thursday. Bernanke overpowered everything. Reminds me of the Greenspan days where we saw the market move in big chunks like that all at one time. The Dow did exactly the same thing, finally broke out of its trading range, heading higher, uptrend, upcycle, an uptrending market. Again, bit of a delay on Friday. We'll see whether that how that handles that on Monday morning, and whether we end up with higher highs and higher lows on Monday, or whether we end up with lower highs and lower lows. Look at the first hour of the market to help you determine somewhat the direction of the market. Again, NASDAQ, can you say breakout? It has a breakout. NASDAQ said highs that it hasn't been in double-digit years. So the NASDAQ certainly following through and leading us up. In fact, we'll take a look in a little while as to what kind of a gain we've had in the overall indices this year as time has gone on. The Russell 2000 certainly continued in the same manner. If you had a condor onto the upside, you better know how to defend it, because it got attacked, as we see that the market just kept right on running. And the Russell, look at that. That's quite an angle coming out of that consolidation area. So we're going to have a pullback, but it's hard to say when it is. What are you going to do when you have a pullback? You're going to buy pullbacks. Why? You're going to buy the pullbacks because it makes no sense to fight the Fed. All four indexes showing great strength and big movement on the news of QE3. Let's take a look at what the week that was, see what kind of changes we had. Dow up 2.2%, NASDAQ up 1.5%, S&P up almost 2%, Russell up 2.7%, as we see the market was moving this week. News overpowers everything. Year to date, Dow up 11%, NASDAQ up a whopping 22% to lead the major indices up for the entire year. S&P up 16% and the Russell 2000 up 16%. It's good to know that all the problems in our economy are over. Will they be bad news in the future? Will this be sold off? You know it will, but I certainly don't know when. Our job is to react to the charts and see what happens. Do I expect a pullback shortly? Yes, I do. How much? Not all that much. A lot of money sitting on the sidelines, and with the kind of news that was being injected by the Fed, this is no time to be timid. VIX, actually, look at that. The market went up and the VIX went up. Interesting. A little more fear in the market on Friday as the market went up. That was a bit of a surprise. We don't see that all that often. Still very low at 14.5. Looking at the bonds, no big surprise. Bonds did what they were supposed to do. Finally dipped below that 200-day moving average. Time for the bonds to bounce again if they're going to bounce. That 200-day moving average should provide some kind of support, but remember, this is kind of a contrary indicator to what the overall S&P does. Looking at TLT, our ETF sector indicator for the bonds, we see that we have had a bit of a pullback, and we should look for some kind of move up, but look at that volume. Not timid, so we may have an entire change. We could run all the way through December. Will there be pullbacks during that time? You bet, but do not fight the Fed. Financials, look at that, new highs as the financials moved up. By the way, who will benefit the most from a QE3? Banks getting rid of all their rotten assets. Who's going to pay for that? Guess. XLF, financial ETF, giving us an indication of what happened. By the way, notice the somewhat bit of a delay. Gap up in the XLF, but a little bit of hesitation. We are in a confirmed uptrend, but certainly some stalling taking place in that chart as we get a doji for the day. Oil reached highs that it hadn't reached in the last 6 months, finally made it above the 200-day moving average as oil actually went over $100 a barrel on Friday for a brief period of time. With that, and not on very big volume, we looked at USO to give us an idea of what that sector is doing. And finally, gold reached a new high for the last 6 months also, as we see it hit a new high. But notice the perpetual doji taking place up there. Remember, when we see that kind of a doji, that can be a reversal signal, but it is not until we get confirmation with lower highs and lower lows. GLD, our ETF sector for gold, went higher on Friday, went higher for the week, and has been moving up ever since the middle of August. And finally, let's take a look at the volume. There's the Bernanke volume, huge. And then let's look at the next day volume. which was Friday. While we might have a potential reversal candlestick, that's not until it's confirmed, but huge relative volume as we saw a lot of action taking place. The institutions are interested in this market. So with that, that's the week that was, and we've got stocks to watch for those of you that are gold members. For the rest of you, thank you very much for being here. This is Butch Shorak, Options University, Monday, September 17th, 2012. Thanks again. Welcome back to my gold members, and let's go ahead and take a look at the market and exactly what it is that we're seeing happen with our favorite stocks as the market has broken out into new highs. What have our stocks done? Well, the first one we're going to look at is the S&P, and we see all those areas of resistance that we used to talk about are now nothing but support. Move those all down there. 1440, this level right here, not a level that we need to talk about anymore unless we're talking about it as support. We're looking at anywhere from 1480 to 1490 for resistance. However, we did see a bit of a stall out on Friday as we saw the S&P go up. So we'll see whether we get a lower high, lower low, and a slight pullback. I mean, at some point, we're going to pull back to the mean. All things return to the mean, and that mean is that moving average, which is certainly rapidly moving up, as we're completely outside of our trend and a little bit overextended in the market. So we'll see whether that overextension comes home this week during options expiration week, which often can provide for us some unexpected volatility. With that, what did Amazon do? New highs. 52-week highs, all-time highs. There's Amazon. But look at that symbol. That candlestick is a doji. It is an area of indecision. We'll find out this week whether we're going to get higher highs or higher lows, or whether it is time for that pullback. Looking at Apple, what did we get? All-time highs. Market is moving. Bernanke has done his job. He's got that market cooking. Actually, that has nothing to do with what he's interested in doing. He's trying to provide liquidity to the market, money to the market, so that we get greater employment. All right, I'm not quite sure if that's what's going to happen. It needs to come from other sources, but the Fed certainly has done its part to get this country cooking again. Looking at AutoZone, not a good sign. Showed relative weakness as the market was going up, and look at that pullback down to the lowest we've seen in the last 3 months. Could get some bounce off of that, but there was news that caused AutoZone to make that kind of a move. CMG has been chucking right along, trying to close that gap that we saw take place from earnings way back there. And we see that when this pulls back, it could pull back a little harder than one might expect for this stock. As we see, it made quite a move off that 200-day moving average in the last 10 days. But we're certainly expected to pull back to some of these moving averages when the market pulls back. But it is showing good relative strength, not the stock it once was, but still quite a runner as CMG. The Chipotle is showing us that it's got some Mexican pizzazz. Next, we take a look at Google. Did not get new highs out of Google. Sitting there within that trading zone that it's established in the last couple weeks, and did not get new highs. If the market keeps running, one would expect it to do so. Any kind of a pullback on this stock is a buy signal, as Google has showed us what kind of a chutzpah it truly has. Green Mountain Coffee leveled off this week, didn't get new highs, and we can expect a bit of a pullback on this as the overall market pulls back. So watch for the pullback. It is inevitable. The question is when. But remember one thing, the market is in an uptrend. And we look for these up cycles in this market, these shorter-term up cycles, to be the kind of thing that we're making money off of. In spite of the fact that September is one of the worst months in the market each and every year, you still have to remember, don't fight the Fed. ISRG, big move on Friday, still well below that 200-day moving average. Look at MasterCard. Who's going to benefit from the things that have taken place by Bernanke and QE3 and the mortgage buybacks? You got it. The banks, the interest-bearing people, and look at MasterCard, showed that it was extremely happy with what happened, as it is in a new trading zone for the last 3 months. Breakout on MasterCard. McDonald's also pulling up, going up to that previous high that we had back there in July. Certainly not approaching that 102 that we had in the first quarter. But McDonald's, the biggest restaurant chain we have out there, showing some strength and following the overall market. All right, next let's take a look at Nike. Ooh, market goes up. Nike goes down. Not much, not showing us much relative strength. Hit that 200-day moving average, pulled back, and if the market pulls back, this could pull back a bit harder, as Nike just isn't doing it. Priceline, trying to crawl back up to that 7. I remember when this stock was trading for $100, and I think, how far can you go? How much movement can you get out of a stock that's got William Shatner running it? And we see that this company just keeps climbing back up. If Europe comes back, Priceline will have that to add to its overall repertoire, as this stock has shown great strength since earnings. Took a beating on earnings, but just started chucking right back up, heading back into new areas. No problem with their model. Only problem they have is how much money are people spending. W.W. Grainger trading within that zone, didn't break out into new highs. This is the kind of stock that is certainly showing us a great deal of strength after its earnings announcement, but it's not running with the overall market. Had nice volume on Thursday and Friday, but again, not running with the overall market. This will tend to run sometimes when the overall market doesn't. But W.W. Grainger certainly going sideways, a good candidate for some of your sideways trending type of strategies. Well, that was the week that was. That was quite a week. QE3 comes to fruition, and it's just a matter of where will the market go, how far will the Fed support this economy. How far? They said they were going to go until there was no place else for them to go. Expecting until 2015. Put no limit on this $40 billion. That's so many zeros, it's beyond comprehension. $40 billion a month in mortgage-backed securities. With that thought, it is Monday, September 17th. It is options expiration week. It can oftentimes bring us a little bit of volatility. We're certainly due for a chunk of volatility as the market is overbought, but the trend is up, and so is this cycle. So enjoy the week. Trade what you see, not what you think. Thank you from Butch Shorak for being here with Options University.